because I'm 90% sure that I'm not wrong. You feel me? So we'll see. But at the end of the day, like I said, yeah, that fair value gap has my attention, and then this weekly buy side liquidity, and that's how that's what we'll be looking forward to going into this week. Hey guys, this is our weekly market outlook where we use multiple time frames to identify opportunities and prepare for the week. Our goal overall is to empower entrepreneurs and professionals, whether you are working a career full-time or running a business full-time. Our goal is to empower you to make day trading a reliable income, all right? So if you're completely new or need a refresher when it comes to day trading currencies or indices, we've gone ahead and created a free mini course just for you. And you can go ahead and access it by clicking the link below in our description. All right. Other than that, if you're ready to get started, hit the subscribe button, leave us a like, and let's go ahead and dive in. All right. So this week we actually have the end of the month this week, as we know, right? We have on today is July 30th, so that means today is technically July 31st. If we're going based off of like the way the markets book, today is technically tomorrow. Excuse me. So that means that today is actually July 31st. So today is going to be the close of the monthly candle. All right. If you guys don't know, I'm not going to really do it too much today. Maybe tomorrow when I do the market recap, I'll do it more of a higher time frame analysis. But when the monthly closes, I damn near look at the monthly chart every week. I'm not going to lie to you. But especially when the monthly candle is closing or the monthly candle closes, that's when I like to do the majority of my higher time frame analysis. All right. So I definitely will spend some time doing that tomorrow, but we know that this is going to be the close of the monthly candle. We're going into the month of August, second month of the third quarter. July was the beginning of the third quarter. Right. Non-farm payroll, first week of every single month is going to be the first Friday of every single month is going to be non-farm payroll. All right. So we understand that it is a, he said, but you know, we understand that we have a high volatility news event this week, which is on Friday. So we want to be aware of how that could affect the price, and how we can maybe be in and out prior to that. But just be aware, Friday we got NFP. And with that being said, we'll kind of look at some things as far as the higher time frame goes in a second. But other than that, I didn't have to even scroll down to see that. But you guys see on Friday, we got NFP Unemployment for the US dollar is going to release this week. And a couple of other things. All right. So going into tomorrow, today we already had some news events pop off. We do have another news event going on with the Australian dollar. They're going to be having a news event 9:30 p.m. But I don't care. They can keep it. We'll be in here tomorrow. Now, tomorrow, Switzerland has a holiday. Tomorrow, well, going into tonight, we'll see. That's interesting, right? So going into tonight, we do have Australian dollar interest rates. Okay, bet. I was confused, all right? Because I thought it was tomorrow that was. So yes, it's tomorrow midnight, which is Tuesday morning. But tomorrow midnight, we have Australian dollar interest rates. So keep that in mind. But tomorrow we have GBP news London session, Euro news London session, and then we have Euro CPI releasing tomorrow at 5 a.m., which is the end of London kill zone, which means London kill zone might extend to about 6 a.m., right? Then we also have their GDP numbers coming out tomorrow, so I'm expecting volatility on Euro going into tomorrow. Like I said last week on Friday when I did the recap, I may actually be in the markets tomorrow, even though not on Mondays. I like to stay out the way, but it's the end of the month. NFP is later this week, and we got a lot of high impact news coming in on Euro tomorrow. So we'll see what's going on with that and identify some reference points we could pay attention to. We also have Chicago PMI at 9:45, and y'all know Chi-Town is one of the economic hubs of the US dollar, so we should see that impact the markets, primarily probably indexes going into that 9:45 time frame. And then we have news with New Zealand dollar tomorrow night. AU, like I said, AU interest rates is tomorrow, so we may see some volatility coming out of Tokyo session, Asian kill zone, and going into London. And then we got high impact news on Euro, high impact news on GBP. We got some dollar news 10 a.m. on Wednesday. Nothing at 8:30 on Wednesday on Tuesday. I'm sorry, nothing at 8:30 on Tuesday though. What else we got going on? We got the ADP non-farm payroll. So like ADP non-farm is basically like ADP is a payment processing company for businesses. So it's like we go based off what their numbers say on Wednesday to kind of get like a idea for like how it might affect the markets on Friday. So that happens on Wednesday, 8:15 a.m. Oil 10:30. What else we got going on this week? Thursday, we're going to have pound interest rate decisions. So we might be actually acting up with GU this week. I left GU alone last week because my eyes was on Euro, but it might be Bank of England might get my attention. All right. So they're expecting to raise their interest rates. And of course, that's what we expect, right? Governments to continue to raise interest rates as the fight on inflation continues. It's like worse than the fight on terrorism, I swear. And then we got 8:30 initial jobless claims on Thursday, manufacturing on Thursday, and then of course Friday we got non-farm payroll. So we have a full economic calendar this week. All right, full economic calendar. Definitely should be a number of opportunities in the market. I would be shocked if it was like consolidative or something like that. And then of course next week I believe no CPI next week. Okay, so next week is gonna be chiller. So this week we should see some popping going on. All right, so that's what we got going on next week. Now, as far as the charts go, and like I said, I'm not gonna spend too much time on the higher time frame today, but I already have some things annotated, so I'm gonna just point them out real quick. We anticipated dollar bullishness last week back up into the lower time frame premium, and we've seen that going on. As you can see, based on the blue zones on my chart, dollar has been pulling up from a higher time frame discount. And this higher time frame range I'm looking at is not just the last couple months. It's not just the last couple years. It's not the last year. It's the last couple years, right? This last swing low on dollar, we haven't had a monthly swing low on dollar before this one here in January, since June 2021. We haven't seen dollar give a low, a real swing low on the monthly time frame. So this is the bottom of my range, and the top of my range is of course where that next swing high is. And so from the bottom to the top of that range, all year long this year, we've been consolidating at equilibrium pretty much. Like just looking at the monthly time frame, I don't care how much trading you've done, just look at this chart. Oh, I'm trying to start using my favorites bar more. Just looking at this chart, nothing like this has happened. Nothing. We have not seen price stay in the same range like this since 2021, right? Ever since 2021, every single month, every single 6 months, every single quarter, price has delivered, right? Higher, or even here in the end of last year, lower, right? But this is the first time that we've seen this within this entire range, and it's so conveniently happening at the equilibrium of this range. And that's not convenient. We understand that this is a higher time frame key level. Now, the reason that I point this out is because given that we are at this equilibrium, we've seen price come away from premium here and trade back down into this discount. Now, I could anticipate seeing price potentially trade down below these lows over here, right? Sell side, a bit of an imbalance down here, fair value gap action going down here. I could anticipate them trading down there, but we formed this swing low here at the beginning of the year, right? So January lows, and then we swept those here, left those lows, and then here we see them this month of July. They traded underneath those lows and didn't spend a lot of time under those lows, right? We see that they made quick work of sweeping under there and then coming up from there very quickly. So in my opinion, my bias on a higher time frame, Dollar has made a sweep on this sell side liquidity in higher time frame and lower time frame discount. My mindset is that we're going to want to be delivering to a higher time frame premium from here. All right. And starting to make my way lower, without starting to aim for all this going on up here, even though y'all know I want to, because I'm bullish AF on dollar, right? But just keeping it where we're at, the next higher time frame premium would be the highs of July, right? Because we have a swing high here on the weekly time frame. This was our last highs inside of this red zone, as well as our most recent range here on a lower time frame. So I'm expecting this to be the draw on liquidity. All right, now just remember, and this is something I'm gonna go more in detail with this week in general throughout our sessions, that there's two things that we're looking for, two characteristics that we're looking for in price at all times. All right, especially when it comes to painting our bias or when it comes to painting our narrative, and that is a draw on liquidity or inefficiencies in price. Narrative, the bias that we have is based on the draw on liquidity. The reason that we're so accurate, last week we were accurate, the week before we were accurate, we've literally been correct on delivery on price, on liquidity for the past, I think, 2 months, except for literally 1 week where I was absolutely wrong. And I think it's just because I was too into my bias on the bullish dollar. And that was the week right here. You see this big behind down candle. Yeah, I was a little bit too into my bias, because even looking at this, it's clear that this was sell side liquidity and the discount for them to target in hindsight. But the whole point and the reason that I say that is because if your draw on liquidity is wrong, if the liquidity that you're targeting on a higher time frame is wrong, the entire narrative is wrong. The order blocks are wrong, the fair value gaps is wrong, the trend is wrong, everything is wrong if we don't have the correct draw on liquidity. So that's why I actually do spend so much time on a higher time frame. As much as I say every week I won't do it, it's hard because I feel so confident, because once I have that higher time frame liquidity level that we're drawing on, I can get all the noise out of the way on the lower time frames, right? Because it's not about all the models and the freaking order blocks and the lines and all those different things. It's about the draw on liquidity. So giving an example, like I said, this week here, where price slammed down into this liquidity level, I wasn't targeting the correct draw on liquidity. I was targeting like up here or something like that. So automatically, of course, I was wrong about my bias for the entire week. It didn't matter what was playing out. I was incorrect on the draw on liquidity. So with that being said, like I said, I'm looking at July's highs as the current draw on liquidity after us sweeping below these lows. All right. And just to kind of paint a little bit more of the narrative, this looks very downtrendish, right? Like just thinking from a retail perspective or from a trend perspective, this looks very low, lower high, lower low, lower high, lower low, lower high. Oh yeah, baby, we selling this week. Right? That's how it's looking. So because of that, it's even more of a reason that even if they are going to continue down here, even if they're going to do that, first, why not go grab the liquidity at the high side? That's how I see it. All right, so that's what we're looking at. Dollar continuing a bit higher. And of course, just to bring us down real quick to our daily time frame, which will be our highest time frame for today, is that our most recent range. So again, range being swing low, swing high, right? And this is just about the last month or so. So that's a very defined price range, right? Interbank price range. Looking at this range, you see that last week, was that last week? Okay, cool. So yeah, last week, you see we traded up into this equilibrium on Tuesday, and we saw strong rejection from it. And then we traded through it, and we saw strong rejection from it above now, right? So that is clearly a key level in price. It's the equilibrium of this price range, which means that below there is discount and above it is premium. Okay, so this fair value gap here is a premium fair value gap. All right, it is a premium fair value gap, a SIBI, right? Sell side imbalance buy side inefficiency. Now, looking at how we acted once we've come down into this area of discount, now is where I'm going to go a little bit lower to our 4-hour time frame. And even I think before we go down to that 4-hour time frame, right? Before we even go down to that 4-hour time frame, what catches my attention is that yes, we traded up into this premium, okay, but we already have traded back down into discount one time and retested a key level. All right, the key level that we retested is this mitigation candle, okay, here, boom, okay, because that was our up move, right, before we saw the sell-off here that took us up higher, right? So this in itself is the mitigation candle to have given us the liquidity to trade higher here, all right? So this we traded back down to perfectly, you can see, on Friday, and then they traded up away from it and closed higher, all right? So just me seeing that from now hitting this discount level, if I haven't said it before, I'm going to go into more detail this week, is that at the end of the day, when we see price in a discount, we're looking for price to deliver from a level of discount to a level of premium, from a level of premium to a level of discount, right? So if we just traded to this discount mitigation, all right, I'm expecting for price to want to deliver now to a level of premium, right? To a higher not a higher time frame, from a discount key level to a premium key level. And so boom, we saw them trade down here, react off of that, and then they traded up higher. And this is iffy because kind of stuck between this little mitigation candle as well, but clearly overall I'm seeing price deliver up to this daily fair value gap. That's where my head is at. All right, so let's go down to the lower time frames and take a look at what we can expect for ourselves, how we can maybe eat a little something, a little something, little something. All right, 4-hour time frame now. Okay, cool. So looking at the 4-hour, again, we have this daily fair value gap up here on the 4-hour time frame. We have a more defined area of buy side liquidity. So as of right now, if I'm sticking with my bullish bias, until proven otherwise, this is the drawn liquidity that I can see clearly on a lower time frame, right? Of course, we know we got July highs as our overall drawn liquidity, but for right now, closest level being that high over there, up here on from July 10th, I believe. Yeah, from July 10th. Okay, so with that being said, going into this week and even looking at last week, right now I'm looking at the range because we're on a lower time frame now. Before, when we was on the daily, I was looking at this range, but now if we're looking for setups for us going into tomorrow, going into Tuesday, I'm looking at a smaller price range, and that price range that I'm looking at is the price range of last week. All right, price range of last week being this was the low of the week here on Thursday, this was the high of the week here. So from the high to the low, this is the price range that I'm paying attention to. Now, again, this is to the T of what we talked about. All right, and we talked about this last week on Market Outlook because we saw that we had this daily order block here. All right, and we also saw that we had this daily fair value gap right above it, right? And honestly, we weren't even paying attention to the daily fair value gap. We were actually paying attention to the 4-hour fair value gap. That's the one that we had identified on last week, right? It was the 4-hour fair value gap. And as you can see perfectly, price delivered down to that fair value gap and literally in one trade gave us the low of the week and the high of the week in literally one setup. All right, so I'm not expecting for them to come any lower than that at this very moment. If they trade lower than that, I'm going to have to reevaluate everything that I talk about today on some real stuff. So for me right now, I'm not expecting price to trade lower than 150. You feel me? I'm not even expecting them to need to go down there, right? For right now, my eyes are paying attention to us trading down into this discount to grab what we need to grab so that we can then deliver to the buy side 4-hour drawn liquidity, buy side liquidity, right? So with that being said, we have equilibrium here. All right, we have a level of sell side liquidity right below that right above that equilibrium. All right, so maybe at the most shallow, like if we just talk about the shallowest possible move, if they wanted to just be extremely bullish, I would expect at least an opportunity coming down below this sell side liquidity. If we see some sort of accumulation, then that's the type of setup that I'm thinking, you know. Now if we're looking for something a little bit more steep, as I go down to the lower time frame, you can see on the 1 hour, right below that sell side liquidity, right below the equilibrium, right? What are our discount key levels on an hourly time frame? We have this last mitigation candle before the buy up, which is our breaker, right? The last mitigation candle is the breaker. So we got that right here. So worst case scenario, I'm paying attention to them trade down there, right? The other level that I'm paying attention to, which is ahead of the break or before that, is the fair value gap, right? Because we got this big behind candle we could all see, right? Big behind candle, right? And yeah, if y'all got questions, y'all definitely just talk to me. I got two desktops now. I got not two desktops, but I got two displays now, so I could see the chat and I could see the screen at the same time. You get what I'm saying? So with that being said, so I'm anticipating to see price trade back down to potentially worst case scenario, best case scenario, whatever, to this 1 hour breaker. Now, the other thing that I'll pay attention to, all right, so we have a couple different levels to pay attention to. All right, so we want to pay attention to what happens at sell side liquidity right here. Okay, could catch some buy opportunities there. We want to pay attention to what happens at this fair value gap. Right, we have this whole thing here. Exactly. Yep. It's the change in delivery, right? So we have this fair value gap here, right? So we have the gap, right? Top of the candle right here. That's our buy side, and then we have this sell side, and inside of that right here is our fair value gap. All right. So I'm paying attention to, when you have a fair value gap or you have an order block or any of these key levels, you don't want them to trade past the 50%. All right. And guess what? The 50% of that fair value gap is right inside of that breaker candle. So again, we can see how they respond between London session and New York session, just wanting to see what does price do to respond here? What does price do to respond if we come down here? But in an ideal scenario, I'm anticipating the low of the week right here inside of this 1 hour breaker candle. That's kind of my mindset. You get what I'm saying? So if I was going to look for one trade for this week to hold for a few days or something like that, it would be a trade inside of this breaker. Anything else, I'm really just going to be taking potential like daily opportunities unless we see massive displacement from here or here. Like if I take a trade here, it's probably just going to be a day trade. Here, just a day trade. But looking to see the low of the week filling here, and that in itself could be a trade that gets held for a few, a day or two until they actually deliver to this buy side liquidity, and maybe even a potential swing trade, depending on how good it looks up to July's highs right there. So I hope that makes sense. Think that was a pretty thorough breakdown on dollar. And again, if I'm wrong, if I'm wrong about this being our drawn liquidity, nothing I just said matters. Right? Nothing. If I'm wrong about that being drawn liquidity, nothing I just said matters. And matter of fact, the way that I deal with being wrong is, first of all, proper risk management, because then it won't matter if I'm wrong. I'll just have to pivot. And if I pivot, all of these reference points that I just identified, this breaker block, this fair value gap, right? This sell side, all of these things become important in the opposite direction. Worst case scenario, if I'm wrong, I just might not be as confident. I'll be extremely confident if our draw liquidity is correct and these key levels are respected. But for the most part, that's what I'm seeing on dollar. All right. So again, any questions, y'all let me know, but that's what I'm seeing for dollar. Now, looking at Euro USD, I'm gonna spend more time on the higher time frame for Euro USD tomorrow, but same concept, right? Same concept. Just looking at Euro USD. Clearly, if I'm bullish on dollar, I'm bearish on euro still, right? Still bearish on euro. I was bearish on euro last week. I went over the recap. I think I sent the recording. If I didn't, y'all let me know and I'll post it in the server. But at the end of the day, still bearish on Euro USD. And just looking at this 4-hour time frame without thinking too hard, we got nice liquidity sitting over here, which is the lows of July. So if I'm targeting the highs of July on dollar, then clearly I'm probably targeting the lows of July on Euro USD. Like I said, we'll sharpen that up tomorrow when I go into the higher time frame breakdown. But for right now, looks pretty good to me, right? Got triple bottoms here damn near. All right, so that's where my eyes are paying attention to as far as a ultimate draw on liquidity. And then just looking at last week's price action, here's that high from Thursday and then the low here on the 4-hour time frame. And clearly I will keep this on the hourly time frame. And let's go back to the 4-hour. Clearly here, right, you can see premium discount. We have a level of buy side liquidity literally sitting right at the equilibrium. All right, so would love to see them trade up to that, and from there maybe we take an opportunity, maybe it continues, but ultimately would be preparing to see the high of the week. I'm supposed to be using my favorites bar, but ultimately preparing to see the high of the week here inside this 4-hour fair value gap. All right, that's ultimately where I'm looking to see it, and I'll actually use my trend lines because it's a little bit cleaner when I use the trend lines for fair value gaps. Right there. Right, so ultimately looking to see the high of the week in there, and going down to a lower time frame just above that fair value gap from the 4-hour, we do have our breaker candle here that formed this high, and then they did sell off. So worst case scenario, seeing them trade up into that level if they don't respect this fair value gap. But nah, the as bearish as euro is right now, I wouldn't be surprised to see it be really a shallow pull up above that buy side liquidity up into that fair value gap, and then sell off from there. So we'll see. It all depends on how they respond at the 50% of this fair value gap, right? If we see them close above that, then of course we may have to pay attention to this level. But that they're so close to each other that they close above that, it might make us question this, and maybe wouldn't even like Euro USD at that point. You feel me? So that's what I'm seeing on euro, right? Just paying attention to that level right there, which is we have the buy side liquidity at 110.50, right? 110.50, and then we have the breaker up there at, oh, look at that. We just gonna use 913 because it make me happy. But yeah, at 1091, right? 1.1091, and that's where we can pay attention to on euro. Good overview. So we'll pay attention to that throughout this week. GBP USD, man. See, GBP USD y'all see how I had this thing? I had this thing mapped. No cap. Mapped. Came straight up to that daily order block and sold off, but I was paying attention to Euro USD. But even right here, see how GBP USD came straight into this fair value gap, respected it, took off. And that was London session on Thursday. Took off, and then Thursday after that big high impact release day, we saw GBP USD come into this daily fair value into this 1-hour fair value gap daily order block, and literally just, goodness gracious, just absolutely plummeted. Gave over 220 pips, man, in no time whatsoever. My God, like that was a crazy day. That was a crazy day. I'm not gonna lie to you, man. That was a crazy day. But yeah. So now going into this week, similar type of ideas. We want to take a look at opening of last week being right here. Same concept, right? Looking at continued bearishness because I'm expecting bullishness on dollar. Right, and we see GU has already traded up to the equilibrium of last week, rejected away a few times, came back down. We've already traded down below these lows, came back down into this breaker a few times. So see some bullishness. Of course, we expecting that, but again, where, right? And just looking at it, same thing as euro, right? We got this 4-hour fair value gap that we can keep our eye on. All right, and again, we're expecting to see them respect that level, at least not trade it even into the 50% of it, not close above the 50% of it, and then trade away. Now, if we see them just straight accelerate through these things, we know two things. First of all, my bias was completely wrong. All right, that's first and foremost. Now, if they do completely trade through that thing, and we have a fair value gap here, and they leave a fair value gap here, this now becomes, right, a level that we can pay attention to the upside. So that's a worst look. I just gave you at least one worst case scenario play. All right, but don't ask me about no worst case scenarios until they happen. But that's what we can be prepared for if they close above that 50%. But just given that order flow is bearish and we still haven't traded to, and one thing else that I'll point out on the higher time frame, even though I said I wasn't going to do it, is that the reason that I don't think that I'm wrong yet, like I said, like I could see them definitely going lower. There's reasons to go lower, but after sweeping this sell side liquidity, we haven't delivered anywhere. And that's something that helps me be confident in my bias, because it's just like we swept this liquidity to do nothing. Like, nah, like we sweep this liquidity, even if we're going to sell off, we got to deliver somewhere. If not on the monthly, at least on the weekly, they would have traded to somewhere. We're not even at the premium on this time frame, right? Looking at it from this high, right? We still haven't even came back up into the premium since May, right? We still haven't even came up into that. So, at the very least, like I said, I would see them trade up to this high, up to this daily fair value gap at minimum on dollar. Then I could maybe think about, seeing how we respond from there. But from where we're at right now, I just can't see that we just fall off, and I'll gladly take my loss because I'm 90% sure that I'm not wrong. You feel me? So we'll see. But at the end of the day, like I said, yeah, that fair value gap has my attention, and then this weekly buy side liquidity, and that's how that's what we'll be looking forward to going into this week. All right, so that is our market outlook on Euro USD and GU. UCAD not getting my attention today. I'm not even gonna lie to you. She not getting my attention today. I will say though that she's acting better, right? Last week she delivered the way we expected. You feel me? I didn't trade her last week, but she is acting the way that we expected. You feel me? She respected the fair value gap, traded it away from it, came up into the daily, above these daily buy side liquidities. But this is just so ugly, can't you see? It's just so ugly, right? But now that they've traded up and above these highs here, I would expect them, if we're gonna see continued bullishness, even same concept, right? If I go ahead and draw a fib on this girl from last week, highs of last week here to the lows of last week here. It's just ugly. It's just ugly. I just don't like it. It doesn't make me want to even mark it up. All right, but Being fair, I mean, she looked good to go. I'm not even gonna lie to you. Like UCAD looked like she could be good to go. She already traded back down into this fair value gap. Here with this wick, we saw them deliver just a tad bit higher. But looking at that higher time frame, I don't really like UCAD too much, so I'm not gonna say too much on her. I'm gonna let her do a little bit more this week and tell me something. Other than that, the only other thing that I can, of course, attest to is my lady NASDAQ. And just let me actually take a look over at the bond market. All right. Yeah, bond market looked like she ready to drop, right? Which again is in alignment with my perspective on dollar, because if bond market wants to go lower, dollar should want to trade higher. And as you can see, this thing looks like she's ready to go for some sell side liquidity over here. Not even gonna lie to you. Don't look like nothing else wants to happen, in my opinion. We came down into, like, out of this last swing here. Got these highs, got these lows. Clearly we are at a discount of this price action over the last month, so that's something to be aware of. You know, something that'll tell me I'm wrong real quick would be bonds markets, right? So we have this vacuum block, order block type action going on right here, right? Like it want to be an order block, but it's like they closed here and opened down here because they have no behavior. And we've already traded down into that level. So if anything, I could definitely see maybe if bonds pulls back up into a little bit of this price action here, up into this fair, up into this equilibrium, then we could pay attention to them moving away from there. But let me point something out, is that, like I just pointed out on GU, I believe it was we were looking at. Yeah, it was GU, right? Here was our fair value gap, right? And I'm actually use the rewind tool a bit here, so it's a little bit clearer to see, right? So here we had a fair value gap. Bingo, right? Got a fair value gap right there. So we would expect that if price action is bullish, that they would respect that fair value gap and they would continue higher, right? Okay, cool. So what happened then? All right, price traded to the fair value gap, rejected away, back into premium, right? So came down to the equilibrium, which was in discount just a tad. Fair value gap was in discount, so that's cool. They traded away from the fair value gap back up into what should be a breaker block right here, but like whatever. Back up into near that breaker block, and then absolutely did not respect the fair value gap, right? And left another fair value gap there, right? So now this has become a inverse fair value gap, as Sir ICT calls it, but some people call this a rebalanced price range, right? So now, you know, this was inefficiency, right? It was inefficient here. They traded through it. Now it's inefficient here. Now it's balanced, because in the past, there was only buy side offered here. There was no sell side. That's the reason it's a fair value gap, right? Because price offered the buys, but never came back down and offered the sells. You feel me? But now they've offered the sells. You get what I'm saying? So we have buy side offered. We have sell side offered. Inefficient is an imbalance, right? It's an imbalance in price, right? So a fair value gap is essentially an inefficiency, right? And a liquidity void is an inefficiency. A volume imbalance is an inefficiency. It's anywhere that we don't have, not insufficient, but inefficient, right? Anywhere that we don't have efficient or balanced price action is an inefficiency. All right, now that we have this inefficiency that's been rebalanced, price is now balanced because there was just a bunch of sell side sitting here. Now you have buy side and sell side. So when price trends back up into this, it's an inverse fair value gap. Like it should offer itself as a area of resistance where we should not see price trade above the 50% of this, or at least it shouldn't close above the 50% of this. And from that case, if they're not going to, and we see that, then they would be delivering where? To the next area of liquidity, which is the sell side that we have identified right here. This right here, this chart is the bonds market. The bonds market usually lines up with indices and usually runs opposite to the dollar. So if I'm looking at bullish dollar and the bonds market is showing bearishness, then we're seeing a continuation, right? Over this last period of time, for the past few months, the bonds market has been moving in a similar motion in some instances as the dollar, which shows us that dollar has a potential to reverse, which it has. You feel me? So it may be that we're at that time where we'll see dollar continue to trade to the upside. And the reason I brought that up in the first place is because maybe indices in alignment with it would now be ready to start making some bearish price actions, right? Now, when it comes to NASDAQ, looking at this swing high here from, when is this? Yeah, this is the high of July here down to the low of July here. Well, that's actually not the low of July, but that's the most recent low right there. You can see that we've traded back up into this premium level once here, and we saw them sell off drastically once already. Now they've traded back up into it right above premium, right? We're over a 4-hour premium buy side liquidity, and we didn't spend too much time up there. We kind of displaced from it, and you see that we're starting to accumulate above this level. All right, so that's actually what we kind of would want to see, right? If we trade above an area of liquidity, we want to see the market start to give us essentially that, right? Accumulation, some manipulation, and then see them distribute lower. So that's what I would anticipate when it comes to NASDAQ going into this week. Using this favorites bar is kind of throwing me off a little bit. I'm not going to lie to you, but I'm going to get used to it because it's necessary. It's a lot easier. All right, so that's last Monday's price action. And then we have this Monday's price action starting out right here. All right. Going up to that higher time frame real quick. Got a couple places I'm gonna pay attention to, right? So we're gonna pay attention to, we got this order block here. And then of course within that order block, we have fair value gap. So we're gonna see how price responds in this level right here. Some internal liquidity sitting there. So we're gonna see how price responds there. All right. So if any opportunities present itself, I guess you could say tomorrow or Monday, whatever the case, I'm going to be targeting this sell side liquidity here at 15,775. If I look for any opportunities on NASDAQ, if anything presents itself for sells. But other than that, I'm not going to be looking for any buys on NASDAQ. I'll just stick with Forex until it's in alignment with my bias. But if NASDAQ offers me any sells, I'll be in with that party. Same thing with these other guys. Man, yeah, my US 30 sell had hit on Friday, but I wasn't trading. I was like, man, look at that nonsense. Beautiful trade too. So yeah, that's what I'm looking for when it comes to this week. We went over dollar, Euro USD, USD CAD, bonds, and NASDAQ. You feel me? So we'll be back on those a little bit deeper tomorrow. So yeah, that's what I'm seeing with those. Hey guys, no mistake, Maverick here at 2 a.m. in the morning in the do-rag to make sure that these videos are perfect for you. All right, if you made it to the end of this video, clearly you've gotten some value. So leave us a comment, like the video, and subscribe. We really appreciate if you share the mission, because our goal is to empower entrepreneurs and professionals, whether they're working a career full-time or running a business full-time, to make a reliable income through day trading, currencies, and indices. Okay, we have a weekly market outlook that releases on this channel. We do it live in our community, so feel free to join our free community so you can get access to stuff like this live. Okay, other than that, we have videos coming out on this channel to go ahead and educate. We have a free mini course in the description that you can get access to right now, and plenty of other value on the way. So you guys have a great one, and see you on the next video here on the Traders Guild.